Hello everyone and welcome to another midweek technical outlook here at xm.com. Today we will be looking at the US500 index, which is currently rebounding on tariff relief following a sharp sell-off at the start of the week. We will also be looking at Aussie dollar, which has jumped to a 15-month high, and also at euro dollar, which is consolidating following a pullback in the previous session. Now let's start with the US500 index, which is currently extending a two-day rebound from the long-term uptrend line drawn from May lows. It is currently testing stronger resistance at the 20-day SMA near the 6,909 level. Now a break above the 20-day SMA might target a retest of the record high set on January 13th near the 6,997 level, and a break above the 7,000 psychological mark would then target levels in uncharted territory, such as the 7,150 level. Now to the downside, the 50-day SMA might provide initial support near the 6,835 level, followed by the 6,800 level, and lower down December lows near the 6,725 level before it could target the 6,630 level and the key 6,500 level, which has been capping losses since September. Now the momentum indicators are reflecting the positive bias, however they are still holding near their midlines, with the RSI holding near the 50 neutral threshold, the stochastics recovering above the oversold territory but still hovering below the midline, and the MACD above zero but marginally below its red signal line. Now let's also look at Aussie dollar. Aussie dollar has extended a 4-day rally to a level last seen in October 2024, near the 0.6800 level. Now should it resume the bullish momentum, then immediate resistance may come from the 0.6900 level before it targets the September 30th of 2024 level at 0.6940. Now to the downside, immediate support might come from the 0.6700 level, which converges with the 20-day SMA, followed by the 20-day SMA near the 0.6600 level, which also intersects with a long-term uptrend line. Now a drop below could then target the 61.8% Fibonacci retracement level of the pullback from the September 30th, 2024 to the April 9 of 2025 near the 0.6551 level, which lies just above the 200-day SMA. A drop below this level could then drop back to the 50% Fibonacci retracement level near the 0.6427 level, which was last touched in November, and a drop below this level could then shift the outlook back to neutral. Now the momentum indicators are reflecting the positive bias, the strong bullish momentum, with the MACD overextending to the upside above zero and above its red signal line, and the RSI edging higher, testing a breach above the 70 overbought area threshold. Now let's also look at euro dollar, which is currently consolidating following a pullback from the long-term uptrend line. The pair had posted an impressive two-day rally at the start of the week, touching a level last seen on 30th of December near the 1.1780 level. However, it is currently consolidating near the 20-day SMA near the 1.1684 level. So should it break above the 20-day SMA, then it could retest the 1.1727 level, which is the 23.6 Fibonacci extension level of the up leg from 1.1468 to 1.8070. Now to the upside, a break above the 1.1780 level last touched in December could then target levels near the 1.8020 level. To the downside, support lies near the 50-day SMA, which converges with the short-term uptrend line near the 1.1658 level, and further below a 200-day SMA near the one, which lies just above the 1.1575 level, and was last touched at and it's the level from which the rebound occurred at the start of the week. Now further below, the 1.1540 level could follow, and deeper losses could hold at the November 21st swing low at 1.1490. Now the momentum indicators are reflecting the slight pullback and the fading of the bullish momentum in the short term, with the MACD flatlining near just below the zero line and marginally above its red signal line, and the RSI easing just at the 50 neutral threshold. Now that's all for today's market wrap. Thank you for watching.